Hello traders, good morning, good afternoon, good evening, bonjour, bonsoir mes amis, guten Morgen, guten Tag, guten Abend. For those of you who are new to us, we are the TSTW 24 traders, and our website is www.stochastic-macd.com. For all trade, we'll use the 5% money management rules and apply stop loss in all trade. This video is for educational purposes only. Very, very important. The title of this video is Tips for Using a Trading System. Tips for using a trading system. So you have created your own trading system, you have designed your own trading strategy, you have your own trading plan, okay? How do you use it as a professional day trader? I want to share with you few tips, okay? Pay attention carefully, and with that tips, you'll be able to make better trading decisions. All right. So we are looking at the Euro USD. We are on a daily chart. What we are going to discuss here, though we are using Forex, valid for stock, for any financial instrument. Okay. The market is changing all the time. All right. But there are things that remain intact. This is what we call market stable data. There are many market stable data, but in this video I want to highlight one market stable data for you, okay, which does not change. The price will go up and down, but this market stable data, okay, will remain valid on all time frame. When we are talking about market stable data, these are things that are valid for all financial instruments on all time frame and every time. So in order to make better trading decision, one must work with market stable data. Okay, so the market stable data that we're going to discuss here is what we call the market patterns. So traders that are following now already know this, but I invite you to stay with me because we have a setup for the Euro USD. So if you trade Forex, stay with us, and I want to share what's going on here. There are three market patterns: the rising channel, the time when the price displaying higher lows, higher highs, until the price fails to display a new higher high. We also have what we call the declining channel. This is another market pattern. These are not a price pattern or alien wave pattern. These are market pattern. During that time, the price will display lower lows, lower high, until the price fails to display a new lower low. All right, we have the third market pattern. This is what we call the horizontal market pattern, or a balanced market, when the price is oscillating between two levels. So you want to understand these three things. Sometimes the price does not go up or go down, it will be oscillating. This is the time when a lot of traders get into trouble. Why they get into trouble? Why they make a lot of wrong decisions? Because they are trading against the market pattern. One thing that you do not want to fight, okay, is the market pattern. You don't want to fight it. No, don't want to fight it. Okay, so market pattern, this is what you have to use all the time when you're about to day trade, swing trade, or make any trading decisions. The next thing that I want to share with you is the trading drill. All right, trading drill. So you want to buy, okay, you must find a valid bullish setup. Okay, if you don't find bullish setup, do not buy. Okay, you want to sell, you must find a bearish setup. If you don't find a bearish setup and you receive a sell signal, do not take that sell signal. If you don't see a valid bullish setup and you receive a bullish signal, do not take it. All right. So the market pattern, okay, the trading drill is 3 steps, okay? So you want to find first a valid setup, okay? Then you have to wait for the valid signal, and then you will look for a low risk entry point. Sometimes you may find a valid setup, a valid signal, but the risk is too high. You go away, you don't take it, because the risk is too high. You want to use the risk-reward ratio. So when we are using the trading drill, we're looking first for a valid setup, Then we wait for a valid signal, and then we check the risk-reward ratio. Depending on your risk tolerance and your trading style, the risk-reward ratio is very important for you. All right? So these are the things I want to share with you, okay? But I want to do the demonstration here with the Euro USD, applying the market pattern and also the trading drill. If you are using any trading strategy, any trading system, you must use the market stable data, because you cannot achieve a consistent winning trade or make a better trading decision if you are constantly violating the market pattern and if you are not adhering to the trading drill. It makes sense? It's also powerful. So I'll get your attention now. Let's start the demonstration, okay? I don't want this video to be too long, so I need to be very, very fast because I want to keep it under 20 minutes. So I'm under pressure, okay, to defend what I've said to you. So we're on a daily chart. The first question you want to ask yourself, what is the market pattern? So you want to day trade. You want to say to me, John, you were talking about day trading. I thought we were going to the 3-minute chart. I thought we are going to the 1-minute chart. I thought we are going to the 5-minute chart. When you are looking for a setup, you go to the higher time frame. At least you can go to 30 minutes, 2-hour, 4-hour chart, okay? Daily chart, even weekly chart. You can go even from the yearly chart to the 1-minute chart. So you are looking for a setup. And the setup, you want to find it on the higher time frame. Very, very important. That's why I go to the daily chart. So on the daily chart, what is the market pattern? Horizontal market pattern. Yes, a balanced market pattern is happening here. On the daily chart, the price is oscillating between two levels. So when the market is oscillating, we can sell at the top of the consolidation and we can look for opportunity to buy here. All right? But this is what we call a setup. This is not the signal. This is not the entry point. All right? So this is just the setup. Sometimes trader will trade the setup. We are not trading the setup. Okay? We are trading the setup, the signal, and the low risk all together. So we have a horizontal market pattern. So the primary test in this point, what's going through my mind is that, okay, trader that has sold it on the top here will be willing to take profit. So they sell. If they want to take profit, they must buy to close their position. The bullish trader that were not selling before will be looking for opportunity to buy here. So this is what we call a bullish setup. But now I need to validate this setup because I see on the daily chart, I must be a little bit curious, go to the higher time frame to see what the bigger picture. The validation of the setup. You remember what I said? Valid setup, valid signal. Okay, that's what I said. So we want to validate the setup. So this is horizontal market pattern on the daily chart. Now let's go. I'm going to go straight to the monthly chart. I've done a bit of homework. I don't want to waste your time because I want to, on the daily chart, the market pattern is what? Rising channel. How do you draw a channel? Some traders don't know it. You need 3 points. You want to draw a rising channel. You must join a low and a higher low. Okay, a low and a higher low. So this, you see the low here and this low are joined together to draw the first line. And I just need 1 point at the top, and I draw a line to that point to make it parallel to my first line. So 1, 2, 3 points. Now that's how I draw my orange trend line on this monthly chart. On the monthly chart, the market pattern is what? Rising channel. When we have a rising channel, we give priority to what? Bullish signal. When we have a declining channel, we give priority to what? A bearish signal. So in a declining channel, we are not interested, okay, to buy. In a rising channel, we are not interested to sell. If we are selling, we know that it's a risky trade, so we must control the risk, okay? So now I see my market pattern. So this is horizontal, this is a rising channel on the monthly chart. The monthly chart is higher time frame, it's a bigger picture. So I can go on and go to the yearly chart and say blah, 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 blah. I don't want to do that here, okay? We see there was a support here, a support here, a support here, the price going up. I'm satisfied with that. I'm a bit lazy now, so to speak, all right? So the market pattern is rising, yes or no? It's rising. So it's rising. If the price is rising, the price might display a higher high before pulling back to the lower part of the channel. This is a very important condition when we are using the rising channel. If you're in a declining channel, or we want to sell, the price might display a new lower low before rallying up to retest the top of the declining channel. When we have horizontal channel, we can sell at the top, we can buy at the low part of the channel, all right? So the market pattern, which we don't want to fight, okay, because we want to make excellent decision, we want to take value signal, we are looking for a value setup. So on the monthly chart, this is also a bullish setup. But remember, there was a high here, but this high here is almost, you see this high here, is almost equal. So it's not very, very interesting, but we give it the benefit of the doubt, we give it a chance and see what's going to happen, because normally we will prefer the price to display a higher high compared to the previous high here before pulling back here. So it's not 100% very, very beautiful, so to speak, because the price did not display a new higher high before pulling back. All right, so this bullish progression is not very interesting because the price did not exceed the previous high. So now I see my market pattern on the monthly chart. On the daily chart, I want to buy because the market pattern is horizontal. The price pulled back to the lower part of the channel. On the monthly chart also, okay, it's again on the lower part of the channel. So this is a bullish setup, okay? Now, I don't want to go too deeply into this. I'm going to go directly, okay, to the 3-minute chart. So we see a bullish setup on the daily chart, on the monthly chart, on the higher time frames. Now we want to enter the trade. This is where a lot of day traders get into trouble. At the time when we are about to buy, so the price you see a value setup, you want to buy, you go to the entry time frame, you can enter the trade on the 5-minute, on the 3-minute, on the 10-minute, on the 15-minute chart. It's up to you, depending on what type of trader you are. When you are about to enter the trade, the time frame on which you're going to enter the trade, you must not violate the market pattern on that time frame. So on this 3-minute chart, the market pattern is what? Bearish. Because why? So this point, I told you 3 points we need. This point and this point. Allow me to draw the first line. And now I just choose 1 point here, which is this one. And I'm going to draw a line that is parallel to the first one. So the price is in a declining channel, yes or no? See the declining channel, yes or no? At the point where we're going to enter the market, the time frame, we must not violate the market. Why? Because I want to buy, okay? I don't want to buy in a declining channel, because in a declining channel, we give priority to sell signal. So at the time frame that we are using to enter the trade, we must not violate the market pattern. Again, there's a warning. So for this trade, you want to trade, I must give myself, okay, plan B or exit strategy. What is my exit strategy? Okay, so for this kind of setup, I will say to myself, which I post already on Facebook, is that, okay, stochastic MACD Facebook, is that priority to bullish signal above 13512. So if the price dip below 13512, I don't want to be bullish anymore. So anytime you want to buy, okay, give yourself the exit strategy. Where is the level you don't want to fight? So if it dip below 13512, that's my exit strategy. I will not be bullish anymore. Or I will be very, very cautious if I want to be bullish, be below the 13512. So on my entry time frame, here I'm using 3-minute chart, I can use 10 minutes. The market pattern is bearish. The price out of the channel, okay, it's looking a bit bullish because it's out of the bearish channel on my entry time frame. Some trader can buy here. It's not a bad decision, but I will prefer, according to my, okay, my trading style, because if it's truly bullish, I want it to run away a little bit from this bullish channel, run away, all right, and then, okay, to pull back, all right, that would be nice. Or even to dip below this horizontal line a little bit, and then to find a support and come back above it, which means this level, okay, if it dip below it and the price return back above, it means that, okay, the bearish momentum has been rejected, price return back above it. So I would prefer it to run up, it's now above it. So I want to see whether it's strong, so it's out. Is it truly strong? Do they mean business to buy? I'll prefer it to run away a little bit to see that it got a bit of momentum. You see momentum? It's about speed. Let it go up a little bit away to see how it's going to behave, and then to pull back and start giving us higher lows and higher high. Or I may just wait. Now it's out of the bearish channel on my entry time frame. I want to see now a new market pattern. Which one? The rising channel here. Okay, which means the price start displaying higher lows, higher high, and I will wait for my first, okay, higher low in a new rising channel, and then I will take it there. These are few tips, okay, for using a trading system. All right, I hope you will find it useful, and we put it to use to make excellent trading decisions. To summarize this video, in order to make excellent trading decisions or to use a trading system like a pro, one must always work with the market patterns, okay, and the trading drill. All right. Sometime you will see a setup. Let me show you. There is another setup here on the hourly chart. This is a different setup for the Euro USD. We see yesterday night. Okay, trader who understand what we call the ABCD chart pattern. Here it is. Price going down, you see it's going down on the hourly chart, yes or no? So price pull back, you see here, from here down, and then went horizontal, okay, and then went down again, the ABCD chart pattern. If you don't know about ABCD chart pattern, go to stochasticmarket.com. So A, B, C, D. Professionals understand this. So yesterday, trader who understand ABCD will know that. Also paying attention to the market pattern on the daily chart, knowing that somebody sold it on the top of the horizontal channel. They are looking to bring it here. Now we have A, B, C. So today, this is easy trade. We will expect it to complete, okay, the D for delta, which is a conversion point. All right. So here we are, another setup, A, B, C. Okay, A, B, C, D. It's completed. Also, at the lower part of the horizontal channel on the monthly chart, we will expect the euro to go up. If it did below the level of 13512, we will not be bullish anymore. It makes sense? It is also powerful. We are the TSTW24 traders. Until the next time, enjoy yourself and be very happy. Speak to you soon.